this era we're living through is about survival. The United States is not cutting rates for jobs or for inflation. They are cutting rates to keep the U.S. Treasury alive, to keep the U.S. government alive, to keep the U.S. empire alive. The cost of that survival is all of you. Hey, listen, man, you can cry and pay to have articles written in Bloomberg, or you can sell your bonds and buy some Bitcoin. The choice is yours. Get you some sats in cold storage and prosper, or have fun staying poor. I don't know what to say. And people say, oh, Jack, he's a tyrant. He curses. He's so aggressive. I'm sorry. I'm committed to the truth. Fed third mandate forces bond traders to rethink age-old rules. Guys, this is massive news. This story continues to prove out to be exactly what we think it is. I continue to think Bitcoin's going to 250K to $1 million in the nearish to mediumish term future.
At the heart of Maller's message is a very simple truth. You cannot print paper out of thin air to consume real goods and services forever. It's not sustainable. The global economy runs on trust, and the trust in fiat currency is eroding. When governments print more dollars, that money eventually finds its way into the real economy. It distorts prices, it fuels bubbles, and most importantly, it weakens the value of the very currency that holds the system together. That weakening of the dollar isn't an accident. It's not a side effect. It's the escape valve.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The US dollar is having its worst year in decades. This is from the Financial Times. Guys, again, this is... People look at this and they say, oh, it's because the tariffs. Oh, it's because Trump's a dictator. Oh, it's because Kamala Harris or blah, blah. It's because the left. It's because the right. It's because this. No. This has to happen. This is math. Guys, printing paper out of thin air to consume real stuff isn't a sustainable system. It's failing. The escape valve is the currency. The escape valve is inflation. It is the only way out. So you have to understand what is happening. Do not get blinded by the mainstream media. Do not get baited into these rhetorics. The truth is very simple. The escape valve is the currency. The escape valve is inflation. It is our only way out. The fact that the US dollar is having its worst year in decades is no accident, guys. This era we're living through is about survival. The United States is not cutting rates for jobs or for inflation. They are cutting rates to keep the U.S. Treasury alive, to keep the U.S. government alive, to keep the U.S. empire alive. The cost of that survival is all of you. I'm going to say that again. The cost of their survival is you listening to this show. You, your life, the things you can acquire, the family you want to have, the house you dream of living in. That is the sacrifice and the expense of keeping this empire chugging along. And so think through the framing of this rant as about survival, understanding the task at hand by the powers that be, and who they are shortcutting to get where they need to go. We're going to continue to go higher because once the Treasury has their checking account full, they go and spend that money into the real economy. One of the biggest spenders in the economy is the US government itself, and that capital finds its way into Bitcoin, into real estate, into the stock market, into gold, into the economy. And so the Treasury general account is being refilled. That will suck liquidity out of the system. And I think why this excites me so much is Bitcoin continues to be the best expression of fiat liquidity, the best pulse, the best index, the best heartbeat as to how healthy the system is, where the liquidity is, all the way to the Treasury literally refilling its checking account, its money bucket. So just so you guys know, I think that there are serious liquidity issues within the market. We are living in two economies, as I've been saying on this show. There is the ultra wealthy, and then there is everybody else. There are scarce desirable asset holders, and then there is everybody else. And we'll get into that in detail later in the episode. But the everybody else continues to struggle. The Treasury is draining liquidity right now. And I think Bitcoin is reacting to that. And as a Bitcoin holder, that's what you want. You do not want Bitcoin to be like the S&P 500, to be collecting a bunch of passive flows that backs the Treasury market with its bullshit 10% up every single year. That's basically more or less reflecting the increase in M2 money supply. You want Bitcoin to be the escape valve, the exit door, the pure reflection of the devil in the mirror. Fed third mandate forces bond traders to rethink age-old rules. Guys, this is massive news. This story continues to prove out to be exactly what we think it is. I continue to think Bitcoin's going to 250K to $1 million in the nearish to mediumish term future. This article shows me that the general public, mainstream media, all these smart economic advisors that could never listen to the little naive kid in the hoodie in the empty closet, they still don't get it. They still don't get it. This is not about ego. This is not about force. This is about survival. This is about the United States has no choice. We are in a debt spiral. Unless you want to stop being the world reserve currency and get on a Bitcoin and/or gold standard, a neutral money standard, you have to bring rates down. You have to finance the U.S. government at any and all costs. And the notion that Bloomberg and economists and bond portfolio managers think that this is about politics, they have no idea what is coming. With Fed board member Myron now confirmed, the mainstream media is preparing the world for the Fed's third mandate, which is essentially yield curve control. Let's fucking go. Yield curve control to Bitcoin equals 1 million. And I agree with him. Bitcoin is going to 250K and then it's going to 1 million. They're going to have to print so much money, debase this currency so much. We are going to see so much inflation, especially in the scarce desirable goods, particularly Bitcoin. Bitcoin inflates the most. It performs the most. You guys have to understand what's happening. You have to. Interest rates are coming down not to juice the economy, not to solve for jobs. They're coming down because we as an empire are about to fail. The Fed is coming out with a third mandate that gives them some control over the long end as well. So now they set rates at the short end and the long end. That's yield curve control. That's real rates negative. That's financial repression against bondholders. Do you understand? We did this. You guys, let me go back. You see this chart here? Look at our gross federal debt as a percentage of GDP. Look, been this high before. When? During the world wars. How did we bring debt to GDP from 120% down to 30%? Financial repression. Bondholders got smoked. Do you understand? Like, it's very obvious. We've lived through this. And the fact that Bloomberg, it also underscores how willing Trump is to upend decades of institutional norms to break down the Fed's longstanding independence in service for his own goals. That was written by a bond portfolio manager. Good game. Hey, listen, man. You can cry and pay to have articles written in Bloomberg, or you can sell your bonds and buy some Bitcoin. The choice is yours. Get you some sats in cold storage and prosper, or have fun staying poor. I don't know what to say. And people say, oh, Jack, he's a tyrant. He curses. He's so aggressive. I'm sorry. I'm committed to the truth. I'm not committed to the left, the right, the up, the down. You guys can count on me every single week to be honest, to be truthful. I'm not anti-American. I'm not anti-left. I'm not anti-right. I'm pro-truth. Find me a place on the internet that's going to spit it to you straight. Whether you like it or not, I call it how I see it. They are in survival mode at the expense of you listening to this. You have to take care of yourself and your family. You have to exit. It sounds dramatic because it is.
To make matters worse, even with tax receipts up 12% year over year, even with tariffs bringing in hundreds of billions, and even with money supply growing, the deficit continues to grow. Imagine getting a 12% raise but still falling deeper into credit card debt every month. That's the United States today. It doesn't matter how much more revenue they take in. The debt spiral is too powerful. The government spends more than it earns, and the gap only grows wider. This is why Mallers argues that the U.S. is locked into a path of currency debasement.
According to the Wall Street Journal, in September 2025, U.S. individual income tax payments for fiscal year have increased by 12% year over year, meaning the U.S. growth in the income that they take from all of us in taxes, the theft that they take from us via taxes. I just had a massive IRS payment. So the theft, the property theft that they are taking from us in the form of taxes grew 12% year over year. Another interesting stat is the U.S. money supply has grown about 5% year over year. So the money supply is up 5%. Tax receipts are up 12%. How the hell is the deficit higher? Guys, that would be the equivalent if you got a 12% raise, but your credit card bill went up anyway. If you're bringing in more income, if you are printing more money, the deficit is supposed to come down. Despite 12% year over year tax receipts, despite 5% year over year U.S. money growth, despite tariffs, which brought in over $300 billion in a month. Our deficits grew. Our deficits grew. This chart is from Luke Groman. Okay, this is the blue line is gross federal debt as a percentage of GDP. Okay, you can see from the world wars until when we divorced from the gold standard, you can see this number go down. Now, if you look at the far right, Luke circles this little hitch, this little tiny dip, this little teeny tiny dip, because we want to get this down as a country. And look at his note here. It reads, note that this little drop in debt GDP from 2020 to 2022, so COVID, required 8% CPI, so record-breaking levels of inflation, 0% interest rates, and it aided by massive recovery from COVID and massive year-over-year SPX increase, so stock market up. So just to make that little tiny dent, that little tiny blip, that if that wasn't circled and I didn't highlight it to you guys wouldn't have even noticed. Just that little blip was record-breaking inflation, 0% interest rates, asset inflation through the roof, that then required us to have the fastest rate hike in the history of the United States, that caused all of our banks to fail. And I'm supposed to sit here and believe that we're going to drive this blue line down without real rates negative, without financial repression? Are you crazy? And the point, again, I've shown this chart a million times, guys. The point is this. What do you cut?
At this point, the choice becomes clear. You can trust the government, trust the Fed, and hold bonds only to be repressed and inflated away. or you can seek an exit. For Mallers, that exit is Bitcoin. Not because it's trendy, not because it's speculative, but because it is mathematically the only asset that sits outside the system, the only asset that cannot be debased, the only neutral standard in a world where every government is desperate to survive. You don't want Bitcoin to act like the stock market. You don't want it tied to the flows that keep the Treasury afloat. You want it to be the escape valve. That's its role. That's its destiny.